Hi there, I'm with Jon Washburn with the Steadfast Mortgage Team at Barrett Financial Group. And one question that is going through a lot of people's heads right now is what is going on with the mortgage rates and how will that affect me as a buyer or me as a seller? What do I need to do about it? What can I do about it? Or am I just supposed to just kind of wait until things calm down? So Jon, tell us what's going on with the rates right now.
Great question. Nothing good. Nothing good is going on with the rates. Rates had gotten progressively worse from last January all the way up to November 10th.
Okay.
On November 11th, things changed and we saw progressive improvement on rates from November 10th to the end of January. Rates on well-qualified conventional loans at the beginning of November were up in the low 7s.
Okay.
By the end of January, we were back down in the high 5s. Everyone was breathing a sigh of relief. And since the end of January, they've progressively gone back up. This morning, in fact, which is March 7th, right before I came in here, we had actually gotten 45 basis points worse on mortgage rates this morning because I guess Chairman Powell was saying some things that the investors of mortgage-backed securities did not like. So right now they are not quite as high as they were in November, but they are pretty close. You know, high 6s, low 7s for well-qualified conventional borrowers, low 6s, high 5s for well-qualified government loan borrowers. So yeah, that's where we are right now. There are some things we can do to hopefully address this.
Yeah, what are some creative solutions? Like if I'm a buyer, what can I do to help myself in this situation?
Great question. So I would say two things. Number one, I would definitely take the opportunity to shop around to make sure that you are getting the best, getting the best rate. There's a lot of lenders out there. Some have better rates and some have worse rates. One of the things that we are doing with the Steadfast Mortgage Team right now is if you go under contract on a house and you lock a loan with a lender, if you send us that loan estimate and we can't beat their rate, we'll give you a $100 American Express gift card. If we can beat the rate, perhaps we can save you some money.
Okay.
So that's one thing we can do. A second thing to do, there's two types of buy downs. And when I say buy down, I mean applying money towards the interest rate to make it lower. There's something called a permanent buy down where you pay money up front and then the rate for the entire life of the loan is lower. There's a second thing called a temporary buy down. So instead of buying down the rate for 30 years, you might buy it down for 1 or 2 years instead.
Maybe until I could refinance?
Correct. Yeah, I think, and a lot of people do believe that near the end of this year and into next year, rates will eventually go down. So because of that, I don't think it makes a lot of sense to permanently buy down your interest rate. I ran some numbers for a guy yesterday, $450,000 purchase. He could pay 1 point, almost $4,000 on this loan to buy the interest rate down by about a half a point. Saved him a little more than $100 a month.
Okay.
But, $4,000 divided by 100,
right.
You're looking at 40 months before you can even break even. And if rates are lower next year, he'll want to refinance and that will be wasted money.
Sure.
However, you can do something called a temporary buy down, where instead of buying the interest rate down permanently, you buy it down a lot for a short period of time. So for instance, there's something called a 2-1 buy down, where you buy the interest rate down 2 whole points in year 1, and then 1 whole point in year 2. So again, the same scenario yesterday, his interest rate would have been a 6.75. But if he does a 2-1 buy down, he'll have a 4.75 in year 1 and a 5.75 in year 2. Okay. His monthly payment savings during year 1 was over $550 a month. That's how much the lower interest rate saved him per month. Now, there are some rules with the temporary buy down. You can't pay for that buy down yourself. It has to come from someone else. So the lender can pay for it, the realtor can pay for it, or the seller can pay for it.
Yeah, so I was thinking, if I'm a seller, instead of lowering the price of my house by 10 or 20,000, I could put out 5,000 maybe.
Absolutely.
And help that buyer out. Actually, he'll be better off in the long run.
It really is a great way for everyone to come out on top in that transaction. So again, in this scenario, he needed, I think, $9,600 from the seller to do a 2-1 buy down. And that was gonna save him $9,600 over the first 2 years of his loan. So now he put in an offer at listing price. So the seller got, a good chunk of change, gave him some money towards the buy down. And the beautiful thing about the temporary buy down is that $9,600 actually essentially goes into an escrow account for you. And if rates get lower a year from now and you haven't even gone all the way through that,
Yeah.
you'll still have money left in that escrow account that's yours. It belongs to you, and you can apply that towards your next refinance.
Wow.
So you'll never lose that money like you would with a permanent buy down where you're just paying, $4,000 to save some money, but you might not even benefit from it.
That's something I think everyone should be taking advantage of.
Definitely, definitely.
All right, well, is there anything else you want to add as far as creative solutions or?
Creative solutions, definitely you want to make sure that you're working with a good realtor that is thinking outside of the box, a realtor with, that's got different types of experience with different types of transactions. I've seen some realtors do some incredible things to go from, we're very far apart, we don't have a deal here, to, oh wow, we found some place in the middle, this works for everybody. So definitely want to just make sure that you're working with people that are willing to think outside the box with you, and again, with a lender that's going to be able to give you the best rates that you can get.
Okay.
Yeah.
All right. Well, thank you very much, Jon.
No problem.